Hi, in this video I'm going to cover two questions related to marginal costing, then graphs, there are three graphs related to the chapter, then I'm going to have the summary of the chapter. So I'll share the question to you, you can try out, then I'll explain you the answers, right? First question, the requirement is break-even point in units and value, and this question is from 2007. So this is a basic question where they gave the variable cost, fixed cost and all, so you have to just apply and find the answers, right? So break-even point units and value, then margin of safety units and value, then expected annual profit, then there are two other questions with the change. Fine. So to calculate break-even point, or before you do the question, you have to divide or you have to classify the cost into variable and fixed, right? Right. So selling price is given, which is 800. Purchase cost per pair of shoes, that is 300, which is what? Variable cost. And their expected units is, selling units is 25,000. So break-even point, since they gave the variable cost and fixed cost in the question, you can directly go to the requirement. Break-even point units equals to what? TFC over C per unit, right? So TFC is how much? So they gave TFC. When they are giving such a thing, you have to check whether that is for the specific period. So in this question is based for a year, and all these three expenses, fixed costs, they gave for a year. So 2 to 1. So this is 5,000. Can we put 5,000 instead of what you call 5 million? Can't. Why? Because you are doing division, you are dividing something, right? So when you are doing that, you have to put the exact value. This is same as what we are doing in overheads costing chapter as well. When you are trying to calculate OER, you have to put the exact value. So 5 million divided by C. C is what? Selling price minus variable cost. Selling price is given 800, variable cost is 300, so this is 500. So you get the answer. So your answer is 10,000 shoes. So you have to write this, right? You have to write what is the base, or like what is their requirement, like on what you have to, for what you are finding the break-even point. And they ask in the value as well. So this is, since still it is first question. So BEP value, TFC over C into selling price. So you already found it, which is break-even point units. So I can put that here. That is TFC over C, right? Then selling price is how much? 800. So you have to count zeros and put, right? So this is the value, 8 million. Fine. So that is a break-even point. Second question, calculate the margin of safety in units and value. Margin of safety equals to what? Expected selling minus BEP or break-even point. So second question, margin of safety units equals to expected selling units minus BEP units, right? So expected selling units is given, which is 25,000. BEP we found 10,000. So your margin of safety is 15,000 units. Then margin of safety value. So I would say MOS value. How to find value? If we have the units 15,000, to convert it to value, you have to multiply by selling price. So this, yeah. So margin of safety value is not the profit, right? Third one, calculate the profit or loss. So we have two ways to calculate profit. One is income statement and the other one is the equation. What is the equation? Unit C equals to TFC plus profit over C, right? So better I recommended you to go with the equation instead of going with the income statement, because income statement, like if you really want to prepare income statement, they will give that in the requirement to prepare income statement, and it is little bit takes some time compared to the formula. So that is why I suggested you to go with the formula. So third one, so right here, unit C equals to TFC plus profit over C. So C means contribution per unit. Profit is the question. So you have to fill this first, then you can subject profit. So units how much? How many units they are selling? Margin of safety is 25,000. So 25,000 the units they are selling, right? So 15,000 margin of safety, they expected is 25. We are doing for expected, right? So 25,000 and TFC is 5 million plus profit. C we know there's no change in the C. C how much? 500. So how to do this? Profit equals to this into this and minus this if you subject profit, right? So I would say 25,000 into 500 minus 5 million. Right, 25 into 5, 125. So when you are doing such a question like this, like when they are giving in millions, you have to check carefully like what you are trying to find. And once you found the answer, you can check with the other answers, okay, whether it is matching. Because if your break-even point value is 8 million, right, then you should know, okay, this could be your profit, right? So like that. So those things are important when you're doing this, because like that is one of the way to check whether your answer is correct. Sometimes you may miss zeros. So if you miss zeros, when you are checking other answers, you can easily identify whether the answer you are getting here is correct or wrong, right? So this is how much actually? 12.5 million, right? And this is 5 million, so 7.5 million, right? And this 12.5 million minus 5 million, right? So you can count zeros and put it, or you can do it in a, you can calculate and find the answer. This is very important. Generally this is one of the question where they gave like this, where they gave in millions. So you have to be careful and find the answer. Don't make mistake in those things, right? So that's the third question. And the fourth one. So fourth one, they said if a selling commission is 500 per pair of shoes, then calculate the number of pair should be sold in order to earn the annual profit of 4 million. So what is 50? What is 4 million? 4 million we know they gave, right? Profit is 4 million. Annual profit. Why annual? Because the question is based on annual. They gave the fixed cost for annual, right? So the question is based on annual. Sometimes they may give for month also. Some question they have month. So if they give for month, if the question is for question also for a month, you have to do for a month, right? So you have to read that carefully, right? So 50 is commission they are paying to their employee, which is variable cost. Why? Because it varies with the number of units. So when you are selling 1 unit 50, when you are saying 2 units 100, like that, right? So it is considered as the variable cost, and they have to earn the profit. Now there's a change, right? So whenever there's a change, you have to check carefully. You have to check each and every value, right? So now VC changed, right? Now my VC is how much? Earlier my VC is 300. Now your VC is how much? 350. Selling price, what happened? There's no change, right? So still it is 800. So what is your C now? C is changing. Because if VC change, obviously C will change. Why? Because C equals to selling price minus VC. How much C? 300 means 350 for 50. What is your TFC? Because I have to check. I have to check whether those things also are changing. No, there's no change in the TFC, right? Because they gave change in the selling commission. So TFC is still 5 million. Right? So the question is, you have to find the number of units to be sold in order to get profit of 4 million. So question is this. Units is the question. Again, same equation. Profit is given now. You have to find the units. Profit is given now. You have to find the units. So units equals to TFC plus profit over C. So TFC how much? 5 million. Profit how much? 4 million. C how much? 450. Right? So units is a question, right? Should be sold how many units? Yeah. So this is 9 million divided by 450. So 2, 1, 2, 3, 20,000. So now you can understand. Let's say they are making profit. Earlier your BEP is how much? 10,000. So your answer cannot be like, here what happened? Your VC changed, right? How much earlier? How much? What is your VC? 300, right? Now what is your VC? 350. Your cost is increasing, right? So you should know, to make a profit, right? The number of units cannot be below this. Why? Earlier, when your variable cost is 300, your break-even point is 10,000, right? Now your variable cost is increasing. For that, your break-even point also has to increase because your cost is increasing. Therefore, you have to sell more units to get their break-even point. Fine. Now, what's the question? They want to get some profit. So, obviously, the units we are getting here should be higher than this. Suppose if we make a mistake here in this calculation, put 2000, you should understand your answer is wrong. That is what I'm trying to say. Like, you can check with other answers, right, whether the findings you are getting for the question or requirement is correct, right? So this is a good example where you can understand. 10,000 was your break-even point when your variable cost is 300. Nothing is changed now, only variable cost is increasing. Okay, when your variable cost increase, obviously your cost is increasing, therefore you have to sell more units to get the break-even point, right? I mean, you have to sell maybe 12,000, maybe 30, I don't know, like maybe 15,000 to get the break-even point. But here the question is, they want to get some profit. So obviously that should be above that, right? So it should be obviously above this 10,000, further, like, right? That is the important point. So you can check with other answers, right, whether the findings you are getting for the specific requirement is correct. Clear? Fifth one, calculate the new break-even point in number of pairs of shoes, assuming additional advertisement expenses there and selling price will be increased by 5%. So when they are giving changes like that, they clearly mention in the question also, there's no relation with the fourth one. Fourth one is a separate thing. That is one scenario, right? You can't take that also. You should not consider that also to do the fifth question. Why? Because if you do so, if they give such a question, like let's say fourth question, what happened? Variable cost increased, right? Let's say fifth question, what happened now? Your advertisement cost is increasing and your selling price also increasing. Let's say if you're going to consider fourth also to do the fifth adjustment or fifth requirement, what will happen? If you make a mistake in fourth one, obviously your fifth answer also wrong, right? Because you made the mistake in calculating your VC. Fifth also wrong, right? So they won't give such a question. Therefore, each adjustment is independent. That is what they mentioned below that. They will mention for sure. But even let's say if they don't mention, it is independent. Because they can't relate that. these are scenarios, okay, because they are talking about future. Okay, if they're going to have this variable cost, what could be their sales, how many units they have to sell to get the profit, like that. So generally for A levels, they won't relate the requirements. Why? The main reason is like, if you make a mistake somewhere in the fourth or some other adjustments, others are gone, like you will anyway make a mistake there, right? That is the one of the reason why they don't relate the requirements. Fine. Fifth one. So I write here, right, somewhere here. So what happened in fifth one? Question is break-even point. You should understand that first, right? Question is break-even point. Fine. So break-even point equals to. So before that, I'll check what happened, right? So what happened? There is a new fixed cost. So earlier fixed cost is 5 million. They said additional advertisement expense. So how much they have earlier? They have the advertisement cost of 1000, right? They can give like this also, right? New advertisement cost is 3100. So what we had instead of 1000, you had to put 3100. Right? In this question, what happened? Addition is 3100. So earlier is 1000. Fine. Now we have additional 3100. So earlier my total fixed cost is 5 million. Now my total fixed cost is 8.1 million, right? Fine. What else happened? They said they are increasing selling price. Yes, when there's an increase in the fixed cost, obviously they have to increase the selling price to get, almost same break-even point. So what is the increase in the selling price? They say selling price increased by 5%. So 800, 5%, how much? 840. Right? 800, 10%, 85%, 40. So your new selling price is 840. So this is for the fifth one. I would say new, this also new. What else happened? Any changes in the variable cost? No, because that is fourth one, right? So there's no relation with that. So variable cost is still how much? 305. What is the question? Break-even point. This information is fine to find the break-even point. And break-even point they ask in what? Units. So break-even point equals to units. TFC over C. Your TFC is how much? 8.1 million. Divided by C. So C how much? 540, right? 840 minus 300. So 5. 1. How much? 6, 581, 554. Right? Yeah. 15,000 shoes. 15,000 shoes. Right? So these are the questions they ask. Here in this question, fourth and fifth are changes. You know how to do when they have changes. Right? So these are the 5 questions they have. Right? So let's do this fifth one in the income statement method. It is just to test or check, or if you don't forget, if you just forget the formula, how to do that, right? They won't give the marks for this for sure, because this is mathematical approach to the question, right? I'm just explaining you because sometimes it may help you. So I'll put here, right? My sales. I got the selling price 840. Right, let's say I prepare the income statement first. CFC profit. Right. So question is break-even point. Therefore your profit is how much? 0. Right. What is your fixed cost? 8.1 million. Right? New fixed cost. So this is 8.1 million. Right. And what is your selling price? So sales equals to what? 840 is your selling price. Question is break-even point in units. That is why then the question is what? Q. So 840 into Q. Q is the question. What is your variable cost? New variable cost 300. So 300 into Q. So I put 840 Q here 300Q here, then you will have 540Q. So 540Q is your contribution. Then what do you have to do? 540Q minus 8.1 million equals to 0. So 540Q equals to 8.1 million. Q equals to 8.1 million divided by 540 and you'll get the same answer. This is one of the methods to do the question and get the answer, but they won't give the marks for this. Why? Because this is not accounting. This is mathematical approach to find the answer. You can check this. You can check with what you found in this working. Fine. So these are 5 requirements they have in the question. You should know to find variable cost. You should know to apply the changes. When you apply the changes, each questions are independent. It's not related to the other one, right? Right. Second question. This is from 2014. So question 2. Right. The first requirement is total fixed cost. Then units to be sold to cover the total cost of activity. Units to be sold to cover the total cost of the activity means like how many units you have to sell to cover the total cost, which is break-even point. Indirect question. Third one is at the to earn 270 profit. Then they said some changes, right? So for this question, you have to first identify the variable cost and the fixed cost, because in this question they gave the cost separately. You have to find it, right? So if we start reading the question, the company has undertaken to introduce and sell a new product. This exhibition to be held for 10 days. The days is important. I need to find for 10 days, right? And cost is 4,500. That is a product cost. That could be the variable cost, because if you are selling 1 unit, cost is 4,500. 2 units, 9,000, right? Fine. Then they have the selling price, which is 8,000. 20% discount will be given, right? So 20% discount. So generally, so in this question, like let's say 8,000 is your selling price and they give 10 to 20% discount, right? So 20% discount is not the cost. Basically, right, when you are giving discount, how you do in financial accounting, 8,000 your selling price and they give 20% discount, which is what? Trade discount, right? So trade discount, how you do? You deduct from the sales itself. Your selling price changed. So this 20% should not be considered as a cost, right? Your new selling price or your actual selling price is not 8,000. It is after deduction of 20%. So selling price is how much? 6,400 then, right? Like 8,000 into 80%. Why? Because 20% discount. No? So after deduction of 20%, remaining is 80%, which is 6,400. 6,400 is your selling price. Then I have to find the variable cost. Okay. So we under variable cost, 4,500 is your variable cost for sure, because that is the cost of the product. Then you have to read the other information in the question, right? Rent for the stall 40,000. Did they mention anything about like rent for a day? No. So total rent is 40,000. So first question is fixed cost. So rent is one of the fixed cost, right? So rent is how much? 40,000. So this is my working, and this is the answer for the requirement. Printing cost of leaflet 5,000. So what they are selling? What is the base? What is output? The product. Some cost, if cost change with the product, that should be considered as a variable cost. Fine. Then allowance to the manager of stall 25,000. So 25,000 allowance manager. Then to sale assistant per day 1,000. So this for a day, it is not related to a product, right? So per day they are paying 1,000, but 10 days, right? So assistant is 10,000. Assistant salary is 10,000, right? Then price of a cup gifted when every unit is produced and sold. Every product is sold, right? Here clearly mentioned. They don't need to mention to that extent or that depth. They can straight away give, okay, they're going to give the gift for 100 rupees for each product. Like, but in this question, they clearly mention for every unit. That is not must for them to mention those things. They can just say gift with the unit, gift with the product. Then you should know, okay, when you are selling more units, your cost for the gift also will be increased. That point is important because this some question, most of the question I would say, they are trying to mention it very clearly. It is not must or it is not necessary for them to say like that, right? So 100 they are giving with each unit which is considered as the variable cost. Then they mention 2 sales assistants are there. So this is for one, no? It should be not 10,000, then it is 20,000. So these are my fixed cost. Rent, they gave the total rent, they didn't mention anything about days. Sometimes they may say, okay, for a day it might be 4,000, something like that. Then what you have to do, that into how many days, right? So in this question they gave it. So this is my total fixed cost, which is the answer for the first question, 45, 50, 70, 90,000. And the second question. Second question, units to be sold to cover the total cost, which is BEP. So BEP they ask in the units. TFC over C. TFC I found 90,000. C is how much? 6,400 and my variable cost is 4,600, right? So this is the C. How much? 1,800, right? Yeah. So 1,800. So if you divide, okay, how much? 50, right? 50 units. They are selling some product, right? So that is the answer for the second question. So second question they ask only in the units. Third one, to earn 270 profit. So this question is very simple. If you are finding this correctly, if you are done with this working and if you find the variable cost and fixed cost correctly, just a matter of applying that and find the answer for the other requirements. Third one, with the profit. So again equation. So they said like they with the profit of to earn profit 270. So quick units is the question. TFC plus profit over C. TFC we know 90,000. To earn profit how much? 270 profit. Divided by C how much? 1,800. So 360,000 divided by 1,000. 200 units they have to sell to get the profit of what you call 270. Fine, right? Because when your TFC is 90,000, you have to sell 50 units to get the break-even point, right? Now it is they are adding more to more. They want to get profit of 270. So obviously you have to sell more than that. So let's say if you are making a mistake in zeros and if you 20, then you should know your answer is wrong because your break-even is 50. No, to earn profit you have to sell more, right? So those things you have to check and find. Okay, you can correct yourself, correct by yourself. Like you don't need to generally you want or you should not make a mistake when you're doing the calculation because this chapter might be 10 marks question and generally they will give the marks for the final answer, right? So just don't make mistake like when you're dividing or when you're multiplying and getting the answer. Fine. Then fourth one. So fourth one, what happened? Profit earned at 100 units of sales when 10%, profit is the question. Sales when 10% commission on selling price is paid to the manager for every unit sold in addition to the allowance for the manager. So they are paying additionally 10% to the manager, right? So I had to find first each value. What is my selling price? Selling price is how much? 6,400. What is my TFC? Which is not changing because they are paying commission whenever they are selling a unit. So it is variable cost. So if you sell one unit, this is your commission. If you are selling second unit, you get more commission, right? So that is not fixed cost, that is variable. Fixed is again fixed is still same. which is 90,000. So variable cost means variable cost per unit, right? So variable cost we already have 4,600. Now they are paying commission of 10%. Now you have a doubt, okay, for which price they're going to give the commission, for 8,000 before the discount or after discount? None of the business will pay like that, right? If your selling price is 8,000 and if you're going to give, or if you're going to sell after discount, if you're going to sell say for 6,400, why they going to sell, why they going to give commission on 8,000? Then they're paying more, right? So the commission should be on what price? 6,400. That's a normal basic, that is how the business would work. Business won't give for 8,000 because they already given a commission, they already given a discount of 20%. The manager is selling at the price of what? 6,400, right? If the price is 6,400, business won't give the commission based on 8,000. None of the business will do that, right? So 6,400 is your selling price. Therefore, they are paying commission 640 for a unit. Your new variable cost is 5,240. What is the question? Profit to be earned at 100 units, right? So 100 equals to, profit is the question, TFC plus profit, you had to find profit, you had to subject and find it, over C. What is your TFC? That is 90,000. Profit is the question. C is changed now. C is how much? 6,400 minus 5,240. 160, 1,160. Right? Because VC is changing, C should change. Don't use this C. Right? 1160. This is 100. So your profit equals to 1160 minus 90, right? So 26. This is generally a full marks question. You can't make a mistake in such a question because you have to be concerned. You have to be concerned when you are finding fixed cost and variable cost. As I told you earlier, once you've done it, almost everything is fine. You have to just apply it and find the answer. And whenever there's a change, you have to find each and every value, then only you have to apply. Right? Fine. So question is profit and you can find it using the formula. So this is the changes, formula and profit. Right? So after this, I'll explain you the 3 graphs related to the chapter. Right. So this is about the graphs related to the marginal costing chapters. There are 3 graphs which are, first one is traditional break-even point graph. Second one, contribution break-even point graph. And the last one is profit volume. So when you are preparing these graphs in your examination or when they test the MCQ, the important point is measurement is not needed. Even when they give a question in MCQ, they don't consider measurement. They just give the value there. So from that only you have to find the answers, not from the gaps between the measurements, the x-axis and the y-axis, right? So that is important. So these are 3 graphs we have, right? So our objective again from the graph is to find, what is the profit, what is the margin of safety, what is the break-even point, and to show those things in the graph, right? So what are the things we need to find the break-even point in the graph? Break-even point means what? The total sales equals to total cost, right? So to find the break-even point, obviously we need the total cost and the total sales to be shown in the graph, and then only you can get the break-even point, right? So what are the lines? So what are the, as of now, what are the things we studied? We studied sales, right? I put S for sales, right? We studied total cost. Then we study total variable cost, because when you are preparing a graph, we can't show something for a unit, right? It should be total always, because there is something called total fixed cost, right? So when you are relating the variable or selling price per unit with the total, then you won't get the answers, right? So obviously you have to relate to the total. So the things which we studied until now is sales, total cost, and total cost we divide into total variable cost and total fixed cost. Then we found the profit, right? This is what we studied. So yes, we have something of contribution, but if you take as a whole picture, we'll have only these things. We have sales, we have total cost divided into 2, and we found the profit. So now when you are preparing the graphs, out of these 5 things, you should know which to be shown in these graphs, which line should be drawn in these graphs, right? In these 3 graphs. So just leave the third one for a while, first and second one. So let's take the second one, contribution break-even point graph or contribution graph. We would say C graph, right? So in C graph or contribution graph, contribution equals to what? Total sales minus total variable cost. So the contribution is related to the variable cost, right? So to prepare the graph, obviously we need these 2, right? Because I have to show my break-even point. So just leave the third graph, the profit volume graph, like take the first and second. To get the break-even point, you need the total sales and the total cost, because at the break-even point both are same, right? From that only we're gonna say, okay, this is my break-even point in the graph. So you need those lines for sure. The point is, we have to decide, okay, which of these to be shown, right? Both cannot be shown in any of the graph. We can't show fixed cost and variable cost in graph, right? So I'm just trying to explain in a way to keep those things in your mind, like when you're preparing the graphs, right? So the contribution graph now. So if it is contribution, what contribution means? Sales minus variable cost. So out of these 2, what should be there in the contribution graph? Obviously variable cost, right? So you can't show fixed cost, because variable cost and fixed cost both you can't show in the graph. That is according to the graph they have. So there's no rules like, okay, you can't show these things, but according to the graph they are showing either one of it, fine. So since it is contribution BEP graph, I am showing variable cost. So in this graph, the other graph, I would go with the fixed cost. That's it. So you have to decide which line to be shown. Generally in the question where I think they have tested in 2011, they clearly asked, or they clearly requested, okay, these lines should be shown. So depends on the question, but if they just ask you to prepare the traditional graph, you should know, okay, you have to go with the fixed cost, not the variable cost. How we can keep that in mind? Okay, contribution graph is sales. Contribution means sales minus variable cost. Obviously we have to draw the variable cost line in the contribution graph. Okay, therefore variable cost is done. We have another graph which is traditional. Okay, we can't show variable because that is there in the contribution graph now. So the other one, which is fixed cost, to be shown, right? So profit line, I'm talking about line, I'm not talking about how we're going to show it, right? These are lines, right? Sales line, okay, we need to prepare sales line. Total cost, yes, we should show the total cost, then only we can find the break-even point in the graph. Out of this, depends on the graph name, we're gonna go with, like, we're gonna prepare whether we're gonna draw whether fixed cost or variable cost. This is profit line, it go with the third one. So third one, right, we're gonna show only profit line. For the third one, we're gonna show only profit line, no other lines, right? So you just know how to prepare the graph, because the problem we are having here is we don't have much questions for you to do, or you don't do much question in preparing graph. You'll do question preparing or in finding the answer through the equation, through the formula, fine, but Graphs you don't do because we don't have much question in past papers. We just explain in 1 or 2 questions and we just move to the next chapter, right? So you have to, or you can practice, or you can try these graphs whenever you're doing the past paper question, at least 1 or 2. Then you know, okay, this is how you have to prepare the graph. Fine. So I'm going to prepare the graph. Like here, first one is traditional graph, right? So first one. Traditional BEP graph, and second one contribution BEP graph, we would say contribution graph as well. The third one is profit volume graph. Generally profit volume graph, they are testing MCQs. There are good questions like related to the graph in MCQ to find the answers from the graph. I'll explain that, right? Okay. Traditional graph or traditional break-even point graph, or before you do the graph, you need certain things, especially you need break-even point. This is my example. So I gave some information. I told you, like, first thing you have to do is finding your fixed cost and the variable cost, right? So in this example I gave it, right? So fixed cost is fine, selling price is fine, variable cost is fine. Expected selling units, why I gave, maybe because to find the margin of safety. The first thing you have to do is to find the break-even point, because our graph, in our graph we have to show the break-even point, right? So break-even point equals to fixed cost, which is 400,000, divided by selling price 500, variable cost 300, so 200, right? I think 2000 units. Yeah. So 2000 units is your break-even point. So I have to show those things. So whenever you are doing the graph, the thing what you have to do is just prepare it first. Just prepare it, then you can fill it, right? So this is x-axis is units and this is rupees. Traditional break-even point graph, I need these 3 lines. The easiest line to prepare or draw is fixed cost, because that should be like this, right? So fixed cost is 400,000. So I put in zeros, thousands. Sorry, I put in thousands. So this is 400, and I mark this as TFC, right? This is TFC. So 400,000, how I put, I just got it from the question, I put it, I didn't consider measurement. Now you have to draw 2 lines, right? So break-even point means the point where your total cost equals to total sales. So I have to draw the total sales line. So at the point of 0, it will be 0. I just draw like this, right? So this is S line, right? I just draw the lines. I don't think about measurement. I just draw the lines, then only I gonna fill it, because no one will check whether it is correctly measured, right? So this is just total sales line. Why? Because at 0 point it is 0. The line should go like this and should be above fixed cost as well. Then total cost should be, because this sales, no, right? So total cost starts from here, because at 0 units I still have my cost. Why? Because fixed cost is something is fixed. Even you don't have any units, let's say rent, you have to pay. Even you don't sell any units, you have to pay, right? So fixed cost is 400. I start from here, and let's say like this. This is total cost. I just drawn it. I didn't take any measurement, I just drawn it, because obviously my total cost should be above the fixed cost, right? Fixed cost should be like this, like parallel to this one. Then total cost should be like this, because like each unit there should be something called variable cost. Now you have to mark these things. This is what you call what? At this point your total cost and sales are same, means this is what we call as break even point. So what is my break even point? 2000, right? So this is 2000, and I have to mark here as well. Now tell me, what is your break even point value? You can't say like 600 or 700, right? It should be some value which you don't know how to find. We know the break even point units, right? How much? 2000. How to find value? 2000 into selling price. How much? 2000 into 500, right? So it should be 1 million. So I put 1000 here. So this is right. See, 400 is here, but my 1000 is somewhere like this, should be above 400 for sure. But if you check the measurements, right, this gap is bigger than the gap between 400 and 1000, right? So I put here in zeros, right? So 1000. So 1000 is your break even point value. Clear? What else I have to show? So if this is break even point, this part is loss. So I would write here as loss. So loss in the sense the entire thing, entire triangle, not only this part, it should be entire triangle, and this is profit. So I would say profit here. Right? Break even point. This is FC, which should be parallel to the x-axis, right? And you draw on the TC, and you have the S as well. What else we have to show is the margin of safety. So my break even point is 2000. Let's assume my margin of safety, or let's have my expected sales as 3000, right? That is given in the question. So I put 3000 here, right? So the lines should not go beyond that. Why? Because you are producing 3000 only, you are selling 3000 only. So what I do is I just raise it, the lines above 3000. So this is a 3000. Now you can mark these as well, right? This point as well. At 3000 units, what could be your sales? At 3000 units, what could be your sales? 3000 into selling price. So this could be right here as 1500. So I would say rupees in 1000, right? So this part is margin of safety units, and here this is what? Margin of safety value, right? So these things you should know to mark, like you should know to show in the, you should know to show in the graph. So how to prepare? You have to find the BEP. You have to prepare the FC line at any point, right? Then you have to just draw S lines and TC line. Then S and TC, this point is what you call break even point, 2000, and value as well. I put the values in zeros. How to find value for break even point? I know break even point 2000 units. Selling price is 500, therefore my break even point value is 1000, mean 1 million. Then I had to show the MOIs as well, margin of safety. Depends, like sometimes they would ask you in a proper way, like this to be shown. Then you don't need to consider everything, all the detailed things to be shown. So if they just ask you to show the break-even point, you can just show break-even point. You don't need to show the margin of safety. But in a proper graph, you have to show these things, right? So here, see, my margin of safety value is how much? 500. That is not profit, right? Profit is this triangle, not margin of safety, this entire thing. So margin of safety, this 500 means the entire thing, right? 1000 to 1500, 500. I can't say the area of this what you call triangle is 500, right? Because this is triangle here. It should be lesser than 500 for sure. 500,000, lesser than 500,000 for sure, right? So this part is profit, this triangle is profit. Can we find the area or the profit amount from the graph? No. You can find in a way like, okay, your total cost is this much, then your sales this much, just from that we can, but from the area you can't. Second one, contribution graph again. This is rupees 1000 and this is units, right? So I don't have my TFC, I don't need to show my TFC, right? Because in contribution graph I had shown only TVC, right? So let's have the first line, which is sales, and I'll just have something from here as TC. So why I'm starting from here? This is what? This should be how much? If I start the TC from this point, this should be how much? This should be 400, right? Because TC starts from TFC. In this axis, why? At 0 level, this is 0. At 0 level, my TFC should be 400 always. It is 400 always. So my TFC should be like this, parallel to the x-axis, but we don't show because it is contribution break-even point graph. So TC is fine. So we know the what you call break-even point now itself, right? We had to show the variable cost line. Variable cost should be parallel to the total cost. Why? Should be parallel to the total cost. Why? Because the gap between the variable cost and the total cost is what? Total cost means what? Variable cost plus fixed cost, right? So the gap between the variable cost and the total cost is what? Fixed cost. It is same at any point of time. Like if 1000 units, again in this question how much? 400,000. 2000 units, again 400,000, right? So the gap between the TC and TVC should be always same. That is why, right, my TVC should be parallel to the TC, right? And it should start from 0. Why? At 0 units, I don't have any variable cost. Variable cost means what? It should change with the units. At 0 units, my variable is 0, right? So if there's no units, I don't have any variable cost, right? So it should start from here and it should be parallel to the TZ like this. So I would draw like this, or like it's a bit higher, right? So these are parallel. This is TVC, right? So the gap is what? This is what? This is TFC. How much? 40. Was not 40, how much? 400,000, right? According to the question. Fine. So this is BEP. So same thing, 2000. Here I have the value. Value is 1000. In 1 million, how to find 2000 the selling price? Then I have to, what else I have to show? I have to show the margin of safety. Let's say I am producing this much. This is my line. This is my quantity, 3000. So this gap is margin of safety. And here I have my sales. for that number of units 3000, my selling price is 500, so this is 1500. So this gap is margin of safety. Here also we have margin of safety. This is units, this is value. What else we have to show? This is loss and this is profit. Yes. So the lines above this level 3000 should be raised because 3000 is our maximum number of units we are producing according to the question. So that is the contribution graph. There's no much different. The point you should understand is when you are preparing, when you are drawing a line for TVC, it should be parallel to the TC. Why? Because the gap between the TVC and the TC is fixed cost, which won't change. So in the question, if they say like, okay, my fixed cost is changing, if they give so that's a different story. That's a different scenario where your TVC is same, total cost would change at some point. So we will explain. I have a question, but I explain a question with a change, right? So how the graph would change. There was a question tested in 2011 with the change. Not a major thing, but you should know to prepare another line with the change, right? So I'll explain that later once I done with all three graphs, right? So this is second graph, which is contribution BEP graph, and the third one profit volume graph, which is compared to other two graphs, which is little bit changed, little bit different. So the graph x-axis goes, so y-axis goes to negative, right? And here again units, no issues, and here it is profit or loss, and this part they say profit above 0, and this is they show as a loss, right? If this is profit above 0 and below 0 is loss, your break-even point should be somewhere at this point, at this line, because if it goes below, if it go above this, it means profit, right? Slightly above means profit, slightly below means that is loss. So the break-even point should be on the x-axis. Fine. Now tell me, what could be a maximum loss for a business at 0 level? So you don't produce anything, but you are at the point of loss. You are having loss. You started the business, you're not producing anything, you're not selling anything, but still you had loss. Why? Because there are some cost which is fixed. You have to pay rent, you have to pay salaries, even there's no production, even there's no sales, right? If you start the business, you have to pay the rent for the building, right? Even there's no production, right? So maximum loss a business can go is the fixed cost. So they show this as the maximum loss at 0 level. This is fixed cost. So what is important in this graph is like you should know to mark the things, like you should know, okay, this is the fixed cost, this is your maximum loss, because no one will sell below that, because at 0 point you don't have any product, you don't have any variable cost, so maximum loss you can go is fixed cost. So from here only to start. So this is how much in this, if we have this as zeros here, this is 400, right? So my line should be like this, right? This is break-even point. Why? This part is loss, this part is profit. Third graph is not compared to all other two graphs, because all other two graphs, the lines we are preparing is sales. We are finding break-even point based on the sales and the total cost, right? Total cost and the sales is the important lines, and we are finding based on that only. In this graph, we are not having sales line, we are not having the total cost line, because according to this table, we are having only profit line. So this is profit line, right? So this point is my break-even point. My break-even point is how much? 2000. So this is 2000. So let's say this is my expected selling units, 3000, right? Yeah. So I would say this as loss, this as profit, right? Fine. Right. So this is profit side, x what you go in y axis, this is profit and this part is loss. Maximum is 400,000, right? Right. So what is, how much is this? That should be how much? So this line is important point. This is the line name is profit volume line or profit line. You would say profit volume or profit line, both are same. So you can use profit volume line or profit line also. Fine. So that is not sales line, that is not total cost line, that's not TV, that's not TFC, that is profit line, right? Fine. So how much is this? How much is this? 3,000 is your expected sales, right? Right. This part is profit. You can't say like 1.5 million. Why? In these two graphs, what is this? Sales, right? But in this graph, this is what? Profit. So I need to find the profit for 3,000 units, and that is the value here. So what is your profit for 3,000 units? Margin of safety, like if we use the other equation, the two equations we have to find the profit, right? Margin of safety, break even point and stuff. So margin of safety is how much? 1,000, and contribution is how much? 200. So 200,000. So this is 200. How we found it? Profit equals to margin of safety units into C. Margin of safety units is 1,000. C is how much? 500 minus 200. So 200,000. Okay, so there is 200,000. Right. So let's say they gave only graph in MCQ, right? Only this graph, which is profit volume graph. So and this is marked as profit line or profit volume line. So profit line is frequently they use. Fine, right? So profit line, and they gave exactly this graph, right? The question they're asking is to find the contribution. They didn't give this information, they just gave the graph and they marked everything and they gave. The question is to find the contribution. How to find? There are two ways to find, right? First one is FC we know 400,000, BEP we know, right, 2,000. So BEP equals to FC over C, then you can find the C. First method. Second method, we have the margin of safety 1,000, we have the profit 200,000. Profit equals to what? Margin of safety into C, then again you can find the C. So those are the things you should understand from the graph when you're doing the MCQ especially, right? So when they are giving you just a graph and finding you the answer, again you're going to use the formula you have. But in MCQs, the other ways to find profit, I think seventh set, which I explained in the last video, the seventh set, which is there are two ways to find, two other ways to find the profit, which is based on the MOS, margin of safety. Those methods are very important, especially in MCQs, right? Because generally the question they tested based on that, right? When they are giving a graph especially, that is the one of the method or most commonly used method to find the profit. So these are three graphs I have, right, from the example I gave here. So after this, I'm gonna have one of these graph, let's say traditional graph, right? I'll draw the traditional graph and I'll show you with the change. Let's say your selling price change, and how to show that in the graph. It is not much important in this chapter, right? But there are chances where they can test that as well. Fine, right? So this is the graph we have from the information available, and we got the break-even point 2,000. So I just shown the break-even point and the margin of safety as well. Now I'm going to explain the changes. Let's say my selling price changed to 800 rupees. mean the selling price per unit is 800 rupees, right? The first thing you should do is you have to find the new break-even point, because when you are preparing a graph, the first thing, the important thing you should do or you are finding is the break-even point, right? So you have to find the break-even point before you do the changes in the graph, right? So there was a question they tested in 2011. That's the only question they have tested with the change to show in the graph. So you just know like, okay, these things are, they are in the syllabus and you should know how to do, right? So 800 is my selling price, so I had to find the break-even point again. I would say new break-even point, TFC over C. TFC is not changed, so still it is 400,000. And C, my selling price is 800 now, and VC is still 300. So when you're doing when there's a change in the question, the important point is you have to check the entire thing. You have to check variable cost, you have to check fixed cost, whether those also change. So you have to read carefully and you have to find whether what else are changing, right? So in this question we have change only in the selling price is 800 and variable cost is 300. Therefore my C is how much? 500, right? So I'll get my BEP as 800 units. So my BEP is 800 units. The new BEP is 800 units, right? Now we're going to show this in the graph. So when you are preparing the graph, you have to check, okay, which line going to be changed, whether it is TFC or VC or sales line, right? So in this example, TFC is not changing because it's still 400,000. Total cost also not changing because total cost includes TFC plus TVC. TFC is not changing, TVC also not changing, therefore total cost is also not changing. So your change is where? On the selling price. Therefore your sales line gonna be changed. So you have to draw another sales line with the new value, right? So my BEP is 800, so it should be somewhere here. So what we have to do is we have to prepare another sales line like this, right? So this is a sales line and this is my BEP new. So we already have it, how much? 800 units, right? So 800 units is your new BEP. So I would say this as sales 1. And you have to find what you call the value also. So when they ask you to prepare the what you call graph with the change, better use like maybe blue pen and the pencil. So blue pen would be the main one, and the change you have to show in some other color, so better use pen and pencil, right? So depends, fine, or you can use 2 color pens, fine. 800 is your break even point units. So what is the value? 800 is units. 800 into how much? 800, not 500, because 500 is not your selling price now. Selling price is changed, right? So sales is how much then? 8 into 8, 800 into 800, this is 640,000. You can check that how. At BEP, your total cost and total sales is right, same value, right? So 640 is your total sales. I have to check my total cost also. So total cost includes what? TFC plus TVC. TFC how much? Okay, TFC is how much? 400,000, right? So I have to check my TVC. At 800 units, what is your VC? 300 per unit, so how much? 240, right? So this is TFC, this is TVC, so again 640. It should match with this because at BEP, your sales equals to total cost. So that is a new break-even point. What else you have? You can show, maybe you can show the new, what you call, the margin of safety. For that, what you're supposed to do is you have to bring this line further, right, to get this. So this is my MOS, I would say MOSN, new MOS, which is 2200. So when you are preparing it, you should know, okay, my selling price is increasing now. So when selling price increased, you have to sell lesser units, right? You don't need to sell again, you don't need to sell 2000 units to get the break even. So if you increase the selling price, right, it is okay to, or you once you sell 800 units, you will get your break even because you are selling at the higher price. So those understanding you should have why it is going down, why break even point is going down when you are increasing the selling price. Practically that's how it works, right? Fine. Or else like from this equation, so you can apply and find it BEP, TFC. So S is somewhere here. So if S increases, C will increase. So if this part increased, then your break-even point will decrease, right? Either way. So this is the change in graph. You should know how to do it. The important point is you have to find the BEP and you have to prepare the new line. When you prepare a new line, you have to check, okay, which line is changing. In this example, my S1, the S1 line is changing, right? So how to find this value at 3000 units? So if you want to show this, how to find that? 3000 units, selling price is 800. So this is 2.4 million, right? 2004, 3000 into 800, right? So that's it. Like that is the entire chapter. I explained the formulas. Then I gave a question. I gave an example. Then I explained two questions. Then graph. We had 3 different graphs, and I explained the change in graph as well. So after this, I'm going to have the summary of the chapter. Right. So this is a summary of the marginal costing chapter. Initially, I divided the cost into 2, variable cost and fixed cost based on the cost behavior. You should know the meaning of variable cost and fixed cost. Variable cost is a cost which change based on the proportion of the units. So if units changes, cost also would change. Fixed cost which won't be affected by the change in the units. The important point in the chapter is finding the variable cost and fixed cost, because they don't give directly, they don't give the exact variable cost amount and the fixed cost amount. You only have to find it and apply in the question. So once you're done with that, then it is just matter of applying that in the equation or formula and find the value. So find the answers for the question, right? So this is the format of the income statement. So income statement again based on the cost behavior. So I have a formula for the profit. This is the basic formula, sales minus total cost. Total cost I divide into 2, variable cost and the fixed cost. Based on that, I have this income statement format. So sales minus total variable cost equals to contribution. So contribution is the new word we introduced, and minus contribution minus TFC, which is total fixed cost, equals to profit. So that's the first part or first point. And the second point is contribution. Contribution, we do have 2 things: per unit contribution and the total contribution. Per unit contribution equals to selling price of a unit minus variable cost of a unit. And the total contribution, we do have 2 formulas. First one is the total sales minus total variable cost. The other one is profit plus TFC, which is total fixed cost. So that is the second part of a second point, I would say. And the third point is CS ratio. So CS ratio means contribution sales ratio. We do have another name for that, that is profit volume ratio. So CS ratio equals to C over S into 100. When you are using contribution per unit on the top, then you have to use the selling price per unit. If you are using the total contribution, then you have to use the total sales on the bottom, right? So that is the first equation. The second equation is, instead of this, we can use change in contribution or change in profit. Why? Because change in contribution equals to change in profit, because there's no change in the fixed cost. Fixed cost won't vary, right? So that is the second equation we do have. So when they are giving 2 set of units, you can apply this formula, the second formula, and get the same answer. So 2 important points there are in the contribution sales ratio. First one is, if they give 40% as a contribution sales ratio, CS ratio, the remaining 60%, the remaining percentage is variable cost. Here I gave an example where CS ratio is 60, therefore my 40% is variable cost on sales. And the second point is delta profit equals to delta contribution. Because of that only, we are using delta profit instead of delta contribution in the second equation or second formula. Then fourth one, break-even point. Break-even point means when a business starts, They want to find, okay, how many number of units they have to sell in order to run the business without profit or loss. Because initially they won't run the business without profit or loss for a while. Then only they will think about the profit. So BEP equals to, we have BEP, we have two things. First one is units and second one is value. Units equals to BEP, units equals to total FC, mean total fixed cost divided by the contribution per unit. So we know how we found the equation, but that is not needed, because if you can directly apply your values in the equation or formula, then you get the answer. So this is units, and the value we do have two. First one is TFC, total fixed cost divided by the contribution into selling price, and the second one TFC divided by the CS ratio. So there are two equations here. If CS ratio is 40%, you have to use 0.4, because you can't just use 40%. 40% in the sense it is 0.4 when you are using or when you are applying in the formula. And the next one with the profit, the same equation, but we're gonna add profit with in the equation. So TFC plus profit divided by the contribution per unit is for units, and for value we do have two again. First one is TFC plus profit divided by the contribution per unit into selling price per unit. The second one is TFC plus profit divided by the CS ratio. So that's the fifth one. So for me, I recommend you to apply these formulas in your exam and find the answer. Don't go with the income statement. So income statement method is one of the methods where we can test or we can check whether your answer is correct, right? So this is the fifth one. And the sixth one, margin of safety. Margin of safety is the gap between the BEP and the expected selling units. So equation for units, expected sales units minus BEP units, and for the margin of safety value, expected sales units minus BEP units. When you are trying to convert some units into value, you have to multiply by the selling price. And margin of safety percentage, they are very rarely they check the test in the Part-2 question, but in MCQ they may test this kind of question. Percentage equals to margin of safety percentage equals to margin of safety units. How we find it? Expected sales units minus BEP units divided by the sales units into 100. And the seventh one, there are other formulas to find the profit. So in margin of safety, what is the important point? Margin of safety is not profit. Margin of safety is the gap between the sales unit and the BEP. The gap between the sales unit and the BEP is not profit. That point is very important, because margin of safety we are finding in units and value, and when you are finding it, we have variable cost as well. So whenever there's an increase in the units after the break-even point, you have the variable cost also, which is directly related to the unit. Therefore, margin of safety is not profit. So we have some other equation to find the profit. So generally, if they ask in the question to find the profit, we go with the basic formula, like finding this. They will give the units and all. You can apply the units and find the profit. But in MCQ, sometimes you may use this as well. Suppose if they ask you to find the profit based on the margin of safety, you should use this formula. So margin of safety, based on the margin of safety, we have two equations to find the profit. Profit equals to margin of safety units into C, contribution per unit, or profit equals to margin of safety value into CS ratio. Again, when you are using a CS ratio, you have to use 0.4, like same as this, not 40%, right? You have to use 40 over 100 if it is 40. Right? Then variable cost calculation, again this is for the MCQ. Generally they test in MCQ, like last 5 recent papers they would have tested at least 3 times. Like very frequently they test this kind of question. Variable cost equals to delta TC over delta units. Why delta TC? Because TC equals to TFC plus TVC, mean variable cost plus fixed cost. There's no change in the fixed cost. Therefore, delta TC. Delta TC means what? Change in the total cost equals to change in the total variable cost, right? Therefore, variable cost per unit equals to delta TC or delta TVC, both are same, divided by the change in the units. So those are the 8 set of things we should know to do the question. I suggest you to find the variable cost correctly and fixed cost correctly, then just applying and get the full marks. This chapter is, finding proper variable cost and fixed cost. That's it. So if you're done with that, then just applying and finding the answers for the question. Then I introduce the graphs. There are 3 graphs. So these are the 5 things we have. Sales we have, TC we have, total cost, TVC we have, TFC, this is the total cost, right, and profit. So from this, using this, you have to prepare the, you have to prepare the graphs. So I make it simple because to find the break even, you should have the total sales and the total cost, right? So for these two graphs, we should prepare these two lines for sure, right? And traditional is based on TFC, contribution graph is based on TVC. Why? Contribution equals to what? Sales minus TVC. Therefore, TVC or VC, like variable cost, is directly linked to the contribution. Therefore, we have to prepare that, or we have to draw that line as well, right, for the contribution graph. Traditional graph, we go with the TFC. So you have to prepare, or you have to draw either one of it. You should not draw both. Therefore, traditional graph is based on the TFC and the contribution graph based on the TVC. The third one is profit volume graph. It is directly linked to the profit. Therefore, you have to draw only profit line. So these are the graphs we have. You should know to prepare the graph. There's no measurement needed. Just to prepare the graph and mark what it is, like how to mark BEP mark. You should know how to mark margin of safety. You should know how to mark sales and lines and all, right? And this graph is important. Why? Because generally they test in MCQs. This line called profit line, and this is profit, and this is loss. The maximum loss a business can go is fixed cost. Why? Because let's say your selling price is 10 and your variable cost should be lesser. It cannot be higher than that. It should be 9, maximum 9.9, right? So let's say 10 and 9. So you will have 1 rupee profit in each unit they are selling, right? If they don't sell anything, if your units is 0, right, the maximum loss you can go is fixed cost, because you don't have any variable cost, because variable cost is related to units, right? So if there's no units, there's no variable cost. So maximum loss you can go is fixed cost, because a business won't sell below the variable cost. If they are selling below the variable cost, it means they know for the fact they are selling at the loss, right? So that is why we show this, or we are marking this as a fixed cost. Generally, for the graph part, they ask you to prepare the graph and mark the lines. In MCQ, they ask you to mark the lines. In part 2, very rare they tested, I think 2011 they tested to prepare the graphs. So it's just matter of preparing graph. What is important point here is measurement is not needed, right? If they test in MCQ, you should be able to do the question. For that, you should have the understanding of the graph. So this is the entire chapter of marginal costing. The last chapter we have in advanced level syllabus in costing, cost accounting. The important point in the entire chapter of marginal costing is, please try to find the correct value for the variable cost and the fixed cost. The recent papers, they are giving some values, and they ask you to find and do the rest, right? Whether it is 5 marks question, for 100 I'm saying 5 marks question or 10 marks question, right? The first thing you should know is just to classify and find the variable cost and fixed cost, because if they give for a day and if they ask for a month, you have to think about that as well, right? The very recent paper, they give for a day and they ask for 3 days, 4 days and all. So those points are very important. Once you find it and once you classify it, then just a matter of applying in the formula. Generally, you could be able to manage with the first five formulas, because sixth one is margin of safety. Margin of safety is a separate thing. If they ask, you have to just put the values. 6th, 7th and 8th in part 2, where they very rarely they tested. You have to apply this and find the answer, because profit we gonna apply this formula, not this one. I don't suggest you to do this, because if there are some changes, let's say C changed, or what you call margin of safety, something is changed, you can't be able to use this. If you use this, you will arrive at the wrong answer. That is why I'm suggesting you to go with the basic formulas, right? So that is the entire chapter of marginal costing. Thank you guys.